The market hasn't topped yet. It is getting closer to a top. So let's break it down. This is the S&P 500 1-hour chart. Typically, the market will not top until the RSI produces what is called a bearish divergence. S&P likely matches or exceeds the prior high. NASDAQ will fail to do so. Next couple of days are going to be critical as the market puts in that final low in this multiple bearish divergence pattern. That means a rally in reaction to the FOMC today or tomorrow is very likely a bull trap as the market puts in that final high, grabs that last bit of liquidity, usually from retail traders, dumps on retail traders, and then exits the market and begins that aggressive deleveraging and de-risking event. Welcome back, you legends. I'm Dr. Cal. Let's get right into this quick market update right off the back of the FOMC minutes and what happened yesterday. Yesterday, I posted that video just as the market opened. I obviously recorded it before the market opened, and I had to get it out to you to warn you about the pump and dump that was set in motion for the FOMC. It's kind of remarkable that it played out exactly like we thought it would. Very spooky, to be honest, the way it played out. So market opened higher, then it rallied, came back down, rallied again, came back, pumped, then dumped, pumped again, and then dumped near the end of the session. We're still in that topping process, in the middle of that topping process. The market hasn't topped yet, in my opinion. Based on what I'm seeing from the charts, the top is not here yet. However, we are in the middle of the topping process. And what happens next is kind of crazy. During these topping processes, things happen that you would normally not expect at all. And what's going to happen, what I believe is going to happen, is a vicious short squeeze is going to come in the S&P, NASDAQ, but specifically in the FOMO type of trade. What is the FOMO type of trade? We're talking about small caps, meme stocks, Bitcoin, crypto, mining companies, things like that will now begin to rip to the upside as the rest of the market actually tops in the next 24 to 48 hours and then begin to come back down. That FOMO trade tends to continue to rally even after the market tops. I'll prove it to you. I'll show you exactly what I'm talking about. This is the S&P 500 down below in the blue and black. Up top is Bitcoin. And just to be very clear, this is why we do not short an uptrend. There is a very specific kind of playbook that we go through, what to buy at the bottom, what to buy in the bulk of the rally, and then what to buy when the market begins to top. I need to take a very close look at this because it's honestly remarkable. So the up top is Bitcoin, below is the S&P. This is where the S&P basically topped. Put in that closing high, it moved sideways for over a week, and then it put in the final high. So this is the topping process for the S&P. We put in a local top, market moved sideways for several days, about a week, then produced this bearish engulfing candle, and then the market continued to move down. Kind of the same look here. Market rips to the upside, puts in this closing high. It does not exceed this closing high for 3 more days, 1, 2, 3 days. The 4th day, we put in the final high and the market moves to the downside. Why am I showing you this? Why is it important? Well, take a look at this. As the market is topping in this topping process where we are in the middle of, we are now in the middle of that topping process. What tends to happen is that Bitcoin rallies. Look at this. The market tops. Bitcoin continues to rally for several days. Market tops, Bitcoin continues to rally for several days. And look at this. Bitcoin is now cupping. It is forming this cupping formation. Had this breakout, pulled back, and then continued to make slightly higher highs and higher lows. And it's now on the verge of a huge face-ripping short squeeze rally, right? As that happens, the S&P will also produce a short squeeze, but it's going to actually top, and then Bitcoin will continue to move higher. This is not just true for Bitcoin, it's also true for a lot of meme stocks, that kind of FOMO trade. Think of stocks that really are beloved by retail traders. So Nvidia, Tesla, AMD, Bitcoin miners, meme stocks like GameStop, etc. These kind of stocks tend to participate in the rally very late, in the late stage of the rally. And here's the proof. The proof is in the pudding, as they say. Look at this market. Rips, continues to rally, and then Bitcoin just consolidates. It is now going to start participating in that rally. Same look here. Market rallies and rips and just continues to rally. Bitcoin actually moves down, and then it participates towards the end of the rally. Exact same look here. Market continues to rally, and then Bitcoin just moves to the downside, consolidates, and then participates toward the end of the rally. We're now in that FOMO stage. We're looking for an S&P 500 top that either matches these previous highs or exceeds them. And then we're looking at the NASDAQ 100 to top shorts of the prior high. That means NASDAQ forms a lower high, S&P forms a higher high. Here's the bearish divergence that we discussed in detail in yesterday's video. We're continuing to form that bearish divergence. It is now beginning to look like a bearish rising wedge, pretty much exactly like these prior tops. Multiple bearish divergence, and then we sell off. Multiple bearish divergence, multiple bearish divergence. We are now in the middle of that bearish divergence. So we're now looking for that last bit of FOMO, fear of missing out rally, to come in, squeeze short. That's why we do not short an uptrend. We just rotate with the market. When we think the market is topping, we rotate into that FOMO rally. When the market actually tops and begins to move down, we rotate into that defensive trade. There's always a rotation going on in a bull market. That's why we don't really short an uptrend even as the market begins to top. So that's what we're looking for now. We're looking for that final bit of short squeeze, complete that bearish divergence, top either at an equal high to the prior high. That means 565 for the SPY or slightly higher, complete that top, and then begin to move down as that FOMO trade continues to kick in and you see Bitcoin rip to the upside. I want to quickly talk about the VIX because this is an absolutely crucial chart to discuss. The VIX has now bottomed and it's beginning to make higher and higher lows as the market is making higher and higher highs. This is a classic bearish divergence. I discussed this in detail in the last video. Please check it out. We had the exact same look. If you notice here, higher and higher highs for the S&P, higher and higher lows for the VIX, and that actually called the top in the market. And then we had a face rip in the VIX, a face ripping breakout in volatility that culminated in the market beginning that correction. This is just one of my gold standard indicators that I teach everybody whenever you want to call key market reversals. Please always pay close attention to divergences in the VIX. When you see the market making slightly higher highs as it moves inches toward new highs, and then you see the VIX bottoming and making higher lows, that's your cue that the market is actually topping and that this last bit of the rally is that FOMO trade that comes in late. Folks that missed the bottom in the S&P, that missed this squeeze, and they're now trying to make it up, going long aggressively as the market is actually at the end stage of the rally. Today we have initial jobless claims that just came out because I am recording this at 8:49 a.m. Eastern Time. Jobless claims came out. They came out below expectations. That is actually bullish because everybody was super worried about the jobs market cooling down. We are expecting continued cooling in the jobs market, but this reading is positive. It alleviates those fears and worries that caused that entire sell-off toward the end of the correction. Higher than expected unemployment was the catalyst behind this last bit of extremely sharp and quick sell-off in the correction. That's where maximum fear came in. The bottom fell out of the market. That's the kind of thing that you really need to worry about when the jobs market begins to tip over as we get closer and closer to a recession. That's all I have for you today, legends. Thank you so much for watching, and we'll catch you in the next one. Bye-bye.
Oh, wow.